Welcome back. You're watching Market Fatafat right here on ET Now, the show where we get you all the stocks buzzing based on news flow as well as on technicals. And talking about technicals, now we have Nirav Chheda joining us on the show. Very good afternoon to you, Nirav. Thank you so much for joining us on Market Fatafat. And it's good to see you all in a brand new look, brand new avatar this time around. Looks like you've got some break time from Market Rally, isn't it?
Oh yes, thanks for the compliment. Yeah, I was on a vacation for a couple of weeks. I'd gone to Ladakh with the family, extensive travel and lovely mountains.
All right, but then the shocking part is the first stock that you're going to talk about is Somany Ceramics instead of Indian Hotels or maybe a travel company.
Yeah, so we stayed there in tents and PGs. So not many hotels we stayed there. So definitely I would not pick the hotels right now. At this point of time, looking at Somany Ceramics, this stock has witnessed a reasonable downside from 950, 1000 odd levels. 1.5 years of consolidation and then a final breakout has come in around this 560, 570 odd levels, and post that some good buying has gone in. I believe this stock can move up toward this 800 odd levels, and very quickly. You're looking at the mid-cap rally at this point of time. It is just taking up a week or so for the stock to move up 20-25%. So I won't be surprised if this stock also does the same. Having said that, one should look to buy the stock at current levels, and also on dip 620 should be a stop loss, and that possible target would come in around that 780, 800 levels.
780, 800 levels. Nirav, I think you're recovering those expenses from Somany Ceramics then over there, but let's move on to the next one, and we will talk about TeamLease, because this one is in focus on the back of a brokerage note that is coming in from Motilal Oswal. They've upgraded TeamLease to a buy, given a target price of 2,800 rupees per share, which is around a 34% upside, from the current market price. Now, what Motilal Oswal is highlighting is that they see a scope of re-rating in the stock led by earnings, and obviously in terms of valuation factors in the near term, that could be a challenge, but they expect the company to deliver a 33% earnings CAGR over FY23 to FY25 and strong structural tailwinds to drive sustainable long-term growth as well. So on the back of this, today we're seeing that the stock is buzzing in trade, up almost 3.4% as we speak right now, Cheryl.
All right, moving on, let's talk about Tech Wabag, and that particular counter has hit a 5-year high in today's trading session. The reason for that surge in the stock price as well as the elevated levels is the fact that the company informed the exchanges that they secured an order worth about 420 crore rupees. This to build a water treatment plant with a capacity of about 270 million litres per day in Raigad. Also, the order they received it from the City and Industrial Development Corporation, the CIDCO of Maharashtra, and the project is planned to cater to water demand for Navi Mumbai. So on back of that order win, a 420 crore rupee order win, Tech Wabag right now is trading higher by about 3.8% as we speak.
Okay, let's move on and talk about it on the charts then, because Cheryl, this one has hit a 52-week high today as well. So it's going to be interesting to see. Nirav, what are you expecting from here on? Already seen a good run up. How much more upside?
So a couple of tailwinds here, for this stock, Vinny and Cheryl. See, basically on the longer term, very importantly, this stock went down from sub 400 odd levels to about 80, and then recovered the whole thing, and then the breakout has come in. Inverse head and shoulder breakout on the longer term charts is in place for this stock, and the possible targets from the longer term period are around 800 odd. But from a near-term perspective as well, a very, very important breakout of around 425 has come in this stock, and post that, the stock continues to move up. I believe near-term, this stock can move up towards that 550, 570 odd levels, which is what one can buy for. You can buy at current levels with a stop loss of around 470 odd. Looks very good from the near term and the long term perspective. So one can look to buy good volume profile as well for this stock.
All right, moving on, Harsh, let's talk about Star Health then. You spoke about ICICI Lombard and now Star Health.
Well, yes, a bit of a unique case here in terms of what CLSA is viewing or how CLSA is viewing the numbers, and what they are suggesting is that the growth metrics are actually moderating. So what they're looking at is in May of 2022, the growth was roughly 12% premium growth. This time around, it's come in at 16%, and in the last month, which is in the month of April, growth touched a solid 25%. Now, the moderation, what they believe, is because of the main policy which Star Health sells, which is the Family Optima policy. And within Family Optima, what Star Health has done is they've increased prices for Family Optima from effective 1st of May. And this is on the renewals, of course. So, on the back of that, you are seeing a bit of a slowdown with regard to the premium momentum that has come through in this particular quarter, and that's why you're seeing the stock action also flat, but CLSA noticing that and suggesting that it's probably due to the renewals. Of course, the breakup is yet awaited for that particular piece.
All right, moving on, then Ashesha, JSW Steel, why is this one in focus?
Well, yes, this one is on the back of a brokerage note. In fact, Morgan Stanley is pretty bullish on this particular counter. They are seeing a 24% upside from the current market price. They are maintaining their overweight stance with a target price of 580 rupees per share. They say that the management has reiterated their volume guidance for FY24, which indicates a 9% upside on a year-on-year basis as far as volumes for the domestic business are concerned. Steel prices have been volatile in the last couple of quarters, and they expect the volatility to continue in FY24 as well. As far as correction in coking coal prices are concerned, remember that coking coal prices are at lowest levels that we have seen since September 2021, and Morgan Stanley believes that this correction in coking coal prices could help the company sustain its spreads at elevated levels. Coking coal prices could have a positive impact of about $100 per ton. So this is the note that has come in from Morgan Stanley, and they've given a target price of 580 rupees per share. And on the back of this note that has come in, the stock is in focus today. It is holding up with gains of nearly 1%.
Okay, keeping an eye on JSW Steel. Let's move on and talk about Gabriel on the charts then, Nirav. When you look at it from the December lows around those 129, 130 levels, the stock has surely seen a recovery coming in as of now. How much more upside can we expect here? What is the target that you're keeping on this one?
If you look at the competition, or the colleagues of this particular stock, they've all moved up in auto-ancillary space, but this stock has been slow. It did move up toward its all-time highs, but it couldn't sustain. That 200 was a very important resistance, and it couldn't go up above that. But in the last fall, it has continued to make a higher top higher bottom formation, which was a very good level to bounce from for this stock, was around 134, 135 odd levels. Post that, I believe now this stock is ready for that breakout of 200. It can move up towards that 225 to 30 odd levels, and very fast at that. The volumes have increased in this particular stock, so definite buy at current levels. You can look to buy even on dips of around 175, 165 should be your stop loss, and around 225 to 30 is where you start booking profits.
Keep an eye on those levels for Gabriel. But let's move on and talk about JK Lakshmi Cement. This one is in focus on the back of a brokerage note coming in as well. And let's not forget the whole cement pack is buzzing as well. But yes, a brokerage note for JK Lakshmi Cement from Motilal Oswal, where they're maintaining a buy rating and a target price of 870 rupees per share. That's almost around a 19% upside from the current levels. Now, what they're expecting is a better geography mix, which will be driving the volume growth and earnings for the company. The strategic expansion will aid the volume growth, increasing the share of trade sale and premium products to aid the profitability of the company. Motilal Oswal also highlights that the company is actually aiming to improve its EBITDA per ton by rupees 300 over the next 18 months. Currently, obviously, the stock is trading at a valuation of 6.5 times FY25 EV to EBITDA. Keeping an eye on this one, Motilal Oswal has a buy rating on this.
All right, let's move on and let's put the spotlight then on Bharti Airtel, because we all know that Morgan Stanley conference is underway, and they also are connected with the management of Bharti Airtel, and they've given out their view on that particular counter. For now, the rating is what they're maintaining is an overweight stance on the company, and with the target price that they have set for Airtel is around 870 rupees per share. What Morgan Stanley is saying is the fact that the key takeaway after they hosted the management is that they continue to see traction in 4G net additions, which is helping a market share gain for the company. They are expecting the ARPUs to continue to rise from here on, although the visibility on the timing of the tariff hike is limited. They're saying that the capex will moderate after FY24, and near-term focus will be on deleveraging the balance sheet. So that is one of the key takeaways coming in from the management. The company stated that they are expecting to complete the 5G urban rollout with some parts of the rural India by FY24, after which capex in India should taper off in absolute term, and this should in fact help the company's incremental cash flows. So you have Morgan Stanley, which is upbeat on Bharti Airtel, overweight stance, target of 870 rupees per share, and the stock is at the day's highest point.
Okay, let's move on and then talk about Divi's labs on the charts then. Nirav, this one surely has seen a sharp correction coming in. What is the upside that one should be expecting from Divi's lab? What are the levels that we should watch out for?
Yeah, so ever since 2021, late 2021, this stock was falling from 5,500 odd levels in a channel formation. So it was making a lower top, lower bottom formation as well. So these two things have changed. A channel breakout has come in for this particular stock around that 3,200, 3,250 odd levels. Post that, the previous top has also been broken. So I believe now this stock is ready to move up towards this 4,000, 4,200 levels and probably regain that 100% retracement of around 5,500 odd. So one can look to buy this stock. It's at a nascent stage. So buy at current levels, even on dips, 3,300 will be your stop loss. And the first target would be around 3,800 to 4,000 levels, and post that, a full 100% retracement would come in place.
Move on then, and let's talk about Bajaj Auto. Harsh, why is this one in the spotlight?
Right, there's a JP Morgan note coming in on Bajaj Auto. What they suggest is they maintain an overweight stance on Bajaj Auto. 5,150 is the target price they are giving here. What they're suggesting is export volume should see gradual recovery. Forex unavailability is still a challenge on that front. What they're also suggesting is the domestic two-wheeler is seeing recovery. I mean, we all know that, but improvement is also being witnessed in the 125cc plus segment, which is a positive. They've launched its EV three-wheeler in the Agra market and has guided for one EV launch every year, which is a positive going forward. The two-wheeler EV may have some short-term negative impact on margins due to some changes in subsidy that has come through. But JP Morgan nonetheless continues to remain bullish on Bajaj Auto. They're seeing a slight inflation in the metals basket, some cost impact on that, as well as BS6 phase 2 norms, which will start kicking through. And the Triumph brand of motorcycles launch is expected later in June, which should aid the stock going forward as well. So a couple of positives, couple of negatives, but overall constructive on Bajaj Auto, it seems, JP Morgan.
Shifting gears from the auto space to the banking space, and Nirav, you picked out Axis Bank from the private banks, and is this something that would be a top pick coming in from the private banks for you, Nirav?
Oh yes, definitely. See, Axis Bank, if you see, it has been a laggard in the banking space for quite some time, but finally, after breaking out, the stock had come down to retest its breakout levels around that 820, 840 odd levels. Then, a very good bounce has come in. It has moved above its all-time highs, which was around 970 odd. Most likely now this stock will lead the banking pack. There is a good likelihood that this stock can come up toward the 1100, 1150 odd levels from, in the next couple of trading sessions only. So look to buy the stock at current levels. On the lower end, around the 960 odd levels, buy 950 should be your stop loss, and once that 1100 odd level comes in, try to book profits.
Right, moving on, let's talk about Apollo Hospitals. Shesha, why is this one in the spotlight today?
Well, yes, the stock is surging in trade today, nearly 1.5% higher in trade as we speak. And that is because Morgan Stanley has maintained its overweight stance on this stock, and they've given a target price of 5,332 rupees per share. The stock, as you can see, currently trades at 5,020 odd levels. They say pharmacy business is expected to grow anywhere between 20 to 25%. As far as hospital services is concerned, they expect growth to be in the range of 13 to 15%, while margins are expected to rise by 100 to 125 basis points in the coming couple of quarters. As far as company's capex plans are concerned, it expects 800 crores of free cash flows, which will support company's capex plans that they have. As far as expansion plans are concerned, they've spoken about that as well, where the company or the hospital will be adding about 2,000 beds with an estimated capex of 3,000 crores. This investment, remember, will be done over a period of next 4 years, and 24/7 digital platform is targeting EBITDA break-even by the fourth quarter of FY24. So on the back of these takeaways that have come in from this report, the stock is surging in trade today, 1.5% higher in trade for Apollo Hospitals as we speak.
Move on, talk about Canfin Home then. We have a brokerage note coming in from Jefferies on Canfin Home. They've raised the FY24, FY25 estimate for EPS by 1 to 2%. They're maintaining the buy rating. They're revising the target price to 850 rupees per share. Furthermore, what they're saying is that the loan growth is to sustain around that 18 to 20% in FY24. Other than that, in terms of the Lagarde repricing for of loans should be a tailwind for the NIMs of the companies, and NIMs can be a surprisingly positive move that we could expect from Canfin Home. EPS growth, I beg your pardon, is to grow at around 18% CAGR over FY23 to FY26. Keeping an eye on this one, buzzing in trade up 4.23% as of now.
All right, let's just take the notes of the flashes on the bottom of your screen. You have cabinet briefing that is underway. The cabinet briefing is being taken by Piyush Goyal, who is the Commerce Minister, and what they're saying is the fact that the cabinet has approved MSP for Kharif crops, and this is the biggest hike in MSP in the recent year. What they're also highlighting is the overall food grain production for Kharif in the Kharif season will touch about 330 metric tons this year. So that's the latest that's coming in from the cabinet briefing, is that they've approved the higher MSP for Kharif crops. So just keep an eye on that particular development. But apart from that, let's talk about the next stock that is in focus in today's trading session, and that is PB Fintech. This one is in the spotlight after the management actually went ahead and met Morgan Stanley at that event, at the event that they are hosting right now, the conference that they are hosting right now. And in that, what they've done is that they're maintaining an overweight stance on PB Fintech. They are also giving a target price of 810 rupees per share on PB Fintech on back of the meeting and the takeaways that they've gotten from the management. So yes, you have Morgan Stanley continuing to repose faith in this particular counter with a target of 810 rupees per share, and you can see the stock also react pretty positively on that note coming in from Morgan Stanley. 3.6% uptick coming in for PB Fintech as we speak right now.
Okay, keeping an eye out on that. Overweight rating is what they've given as well, so that's the reason for the up move as well. NRB bearings, Nirav, that's the one that you've picked out for on the charts. Not that I've seen this making your list before as well a lot, but what are the charts indicating for this?
So, in the capital goods space, a lot of stocks have moved up quite well, so Schaeffler, which is its competitor, or the others like Helicon, Rolex, Rings, KSB Pumps, all of those stocks have moved up, but this is one mid-cap stock which hasn't moved up much. It gave very good results, and post that, a breakout on the technical charts has come in. The breakout has come in around that 185, 187 odd levels, and post that, the stock has moved up. It went up to 200 odd today, and I believe this stock has the gumption to go up towards that 235 to 40 levels very soon. So look to buy the stock at current levels. 180 should be our stop loss, and around 230 odd start booking profits.
Then Harsh, let's talk about Sun Pharma then. Why is this one in the spotlight?
Well, yes, you've got Morgan Stanley's note coming through on Sun Pharma. What they're maintaining is an overweight stance on the stock. What they're suggesting is target price of around $1,170 a share. They believe that a high single sales digit growth for FY24 is what they're penciling in into their considerations. They're suggesting near-term cost pressures due to higher R&D and sales expenses for Sun Pharma into FY24 onwards, and the specialty business, they're expecting that to grow faster than overall revenue. So specialty business revenue to outstrip overall high single digit revenue growth, and they're suggesting that Sun Pharma is pursuing its offer to buy the entire minority stake in Taro and delist it, so that is a possible positive as well going forward. But roughly a 15% upside to current market prices, 1170 is their target price on Sun Pharma.
Okay, that's Sun Pharma, but let's keep it with the pharma space because Harsha Upadhyay, CIO at Kotak AMC, believes that the pharma sector is actually a good sector in terms of the defensive side. Listen into what more he had to say.
Pharma has been a difficult sector. There is no single driver that's driving the sector. We have seen a lot of institutional funds shunning the sector. There is clearly an under ownership. If at all there is a single thread that's there for the entire sector, I would say that's the under ownership of the stocks. But unfortunately, there is no single driver that can really lead to positivity in the sector. The valuations are also fine. So to that extent, it can be a good defensive sector, and we'll have to watch out for any positive triggers as we go ahead.
All right, moving on then. Tata Motors, Ashesha, why is this one in the spotlight today?
Well, yes, their analyst day is currently underway. The meet currently is underway, and the stock, in fact, is trading at the highest levels that we have seen since 2016. Currently trading at 570 odd levels, an uptick of 2.5%. They have also spoken about their margin guidance, where they say that they intend to deliver 3% increase in margins in the medium term. As far as their market share is concerned, FY23 compact SUV market share stood at 35.2% versus 12.3% that we saw in FY20. They've slated their medium-term guidance across segments. First up, we'll talk about commercial vehicles, where they say that they're expecting strong double-digit EBITDA, and they will be entailing an annual capex of about 2,500 crores, and they expect to generate free cash flow pretty strong. As far as passenger vehicle segment is concerned, they expect double-digit EBITDA margin. They expect to be FCF positive, and they will entail an annual capex of about 3,000 crores. On the back of these takeaways that have come in from the analyst meet that is currently underway, the stock is surging in trade today.
Okay, that's Tata Motors on the back of news flow. But Nirav, Tata Motors on the chart, how is that one looking like today, gaining almost more than 2% in trade?
Yes, so this stock had a beautiful upside from sub 70 odd levels, went to 535, 540, and post that long consolidation of 1 year. That breakout has come in. It's a rounding pattern breakout as well, which is a very strong pattern according to me. It's a slow pattern, but once that breakout comes in, the stock really flies. And that is what we are seeing post the breakout for this stock. This stock got a breakout around 540 odd, and post that you are seeing a tremendous buying coming into this counter. I believe this counter is all set to move up above its all-time highs, above that 600 odd levels. It can reach around 670, 700 very soon. So look to buy the stock at current levels. You can keep a stop loss of around 540 for your longs, and 670, 700 should be your target.
Let's put the spotlight back on markets then, and 18,700 is here for the Nifty. Finally, Nifty has broken out of the 18,500, 18,600 range. Remember, we've been stuck in that range for at least 7 trading sessions, and today you can see the Nifty has surpassed those levels. 18,700 on the screen. We are hardly 180 odd points away from the record high levels for the Nifty. As of now, Nifty has surpassed the 18,700 mark for the first time since December 2022. So yes, we are at almost 7-month high coming in for the benchmark indices. And yes, it has surpassed the 18,700 mark for the first time in this year. So a good day looks like it's transpiring as a good day, Vinny.
Absolutely, a good day transpiring for the Nifty 50 as well. And obviously, let's just look at some of the big movers that are coming also over there. What are the big names doing, like Britannia, Nestle, RIL? What is that doing on the charts? Let's pull that chart up for RIL also as well. Is it gaining in trade? That would be heavyweights moving up. Britannia also obviously seeing gains over there. Nestle seeing gains over there. Pull up the charts for Reliance Industries as well. Where is that holding on to? That would be among the top movers today in trade as well.
Absolutely, Vinny. Let's take a look at Infosys because that's among the top contributor for gains for the Nifty at this point in time. You have Bharti Airtel that's also contributing healthy. Remember, the Bharti Airtel was trading higher by approximately 3%. L&T is the other one that is actually aiding the Nifty. And like Vinny said, Reliance Industries, that's one also is aiding the up move in Nifty, and TCS as well. And this is the reason why you have today Nifty that surpassed the 18,700 mark, first time in the year 2023. It's the highest level since December 2022. So that is your, that's the way how the markets are performing at this point in time. But let's move on then and let's take the next stock that is in focus in today's trading session.
Absolutely. Let's actually, before we go to that, okay, let's go to Mascot talk then. That's the stock that we're going to talk about because when you look at it in terms of obviously last couple of days, we've seen those defense players, especially shipbuilders that have been buzzing in trade. Now, obviously, according to reports that are suggesting that Germany and India are actually going to be closing on a deal to build a diesel submarine in South Asia country as well as Russia. That's prolonged war in Ukraine pushes New Delhi to expand its sources of military hardware beyond the top supplier as well. So keeping an eye out on that because they could together with Tyson Group, MyScout Doc could be applying for this as well, and the bid could be an estimate of around $5.2 billion. Projects to build 6 submarines for the Indian Navy. Keeping an eye out on that one.
All right, that's Mascot Doc for you. That is in focus in today's trading session. And like Vinny said, off late you have a lot of defense counters that are buzzing in trade. But with that, we are totally out of time on this edition of Market Fatafat. Thank you so much, Nirav, Harsh, Ashesha, as well as Sumit for joining us on the show. And yes, as we leave the show, Nifty still holds above 18,700.